so much for tuning into today's live stream. Today is let's see here. Today is March 31st, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So today we don't really necessarily have anything that's, I would say, impactful, right? We don't really have any red photo news. We have Chicago PMI numbers, but besides that, nothing too insightful. So coming into, I guess, this week in general and today, I was anticipating lower prices, right? So you guys can see here, this is the weekly time frame. I would denote that by a red bold line. And then I'm going to do the daily candle as a blue line. So let's first start on the weekly time frame here. So this is the weekly candle that we created last week, right? And based on how we closed here on this weekly candle, the easiest assumption that you could make, right, is that we're going to take out previous week's low. And I'll denote that by a green line. And so coming into this week, the easiest, like I said, the draw of liquidity here is that weekly low. And you guys can't see it here, but we traded into an inefficiency. So this gray shaded box here is a weekly fair value gap. We traded into a weekly fair value gap. We respected it and created a down closed bearish weekly candle. This makes sense for us to do, right? This makes sense that we're going to, treat this weekly power of 3 as a bearish weekly power of 3 because we know why we created it. We know why we even created this bearish candle in the first place. And so whenever we opened up here on Sunday, we gapped down and we actually took out the weekly low. And if you guys can see here, the weekly low is the same low as the daily low. And on Friday, we really expanded a ton here on Friday. We expanded 700 points coming into Friday. So coming into today, I can't really use the daily time frame or the weekly time frame as a intraday bias, right? Or I can't use those two time frames in general, just because we completed the objectives already. We completed the daily objective and the weekly objective. There is another thing that sorry guys, this throat's really bothering me here. There's also one thing that I do want to draw your attention to here. So for about a whole week now, I've been drawing your attention towards this 5-week candle here. Right, so this is a 5-week candle, and notice how we closed here on this weekly or this 5-week candle. Down close candle, it's bearish, and it suggests that we're most likely going to take out this 5-week low. And pay attention to how we closed here last week, right? So try to refer back to how we closed last week. We closed bearish last week, right? And it's in confluence with this 5-week order flow, which is also bearish. And what do we do here coming into Sunday's opening? We gapped down and we ended up taking out the 5-week low, which was something that I've been drawing your attention towards about the whole entire week last week. But so we did take out that 5-week low here whenever we gap down. I do want to take a look at the whatchamacallit here, ES chart here on the forever ES futures. So we haven't taken it out. We haven't taken out the 5-week low here yet on this chart. But I'm willing to bet that we're most likely going to retrace back into the discount of this dealing range. Yeah, so I mean, we're about to close here on the monthly candle in about like 7 hours or so. So just pay attention to that. And with the way that we're closing here on this monthly candle, easiest assumption to make is that we're most likely going to take out the monthly low. It's, it's fairly easy to assume that. And that's just something that I'm going to be watching for coming into next month. Alright, so for this morning at least, I'm going to utilize the 4-hour time frame and the 8-hour time frame. So every single candle or every single time frame has a specific objective, right? And so this 4-hour candle and this 8-hour candle, they're both going to close in about 11 minutes or so. So whenever we close on those two candles, you can anticipate a new objective to be created, which is most likely going to be the 4-hour low, right? The 4-hour low appears to be the draw of liquidity here for this next, 4 hours. And so if I can find a model that aligns with that order flow, that bearish order flow, then I'll consider buying. But as of right now, I'm just going to continue to wait, right? Just continue to see where prices are at, and yeah. But hopefully you guys did get some sort of, incitement perspective on how I view prices. And yeah, I was actually considering buying a put option, but if you guys take a look at this here, we actually gapped down here on the ETF, the SPY ETF, and yeah, we gapped 8 points or so. So yeah, that's pretty interesting. I want to see prices reach down to that -1 sell side level here. Sell side level, this this sell side liquidity here aligns with the -1 standard deviation with this retracement into this weekly fair value gap. So we retraced into a weekly fair value gap. So this is the SPY, but futures did the same thing. So we retraced into a weekly fair value gap. We created this dealing range here, and then I used the projections of this dealing range to get, forwarded data here, right? So this is just something that I'm really kind of paying attention to. So now I'm gonna label this NQ swing high here as a breakaway, and not as a breakaway, sorry, as a market structure shift. So if we ever trade past this this high here, I would consider that as a weekly market structure shift. But that's future on into the future. That's way into the future. Right now, I am still I would like to see this, the delivery of sell side. But yeah, let's just continue to wait for, the closure here on the 4-hour candle and the 8-hour candle. Not really going to force anything here coming into the morning. I really am going to be patient, right? Weekly objective has already been taken out. Daily objective has already been taken out. So now I'm probably just wait until 10. I guess 10 a.m. Eastern time. So then I'll go into a chess match here. Go here. I have here. Go here. It's probably okay. Huh. Maybe he didn't anticipate that. Maybe he did not anticipate that. I'll just take this. He's probably gonna. Oh, or here. Yeah, I'll just go here and then bring out my bring out my bishop. Can he cancel it? I think he has to move. If he goes here, I might just swing up. Alright. I really don't like this. Not too much. Not too much. Actually, go here and then I'll be able to take this. Ooh. That's fine. That is gooch. That's gooch. can take this and go here. Oh, I can't. Oh, I have to go here, or oh, I can't go here either. Okay, I can go here. Oh yeah, and then take his queen now. Oh my gosh, wait, I'm trolling. That's not even a check. Bruh. Bruh. I'm taking this. 2 more minutes left. Coming into the open. Oh, I could have taken his rook. Go here and then take his rook. Checkmate. I feel like I could have won. Mate in 3 here. Well, it's okay. Here's the open. This little push up, not a fan of. Not a fan of. There's the not 4 o'clock, but the 4-hour open, 10-hour. This is gonna be 10 a.m. open right here. And so here I would anticipate for us to rebalance this inefficiency, but let's take a look at the 4-hour candle and the 8-hour candle. It's for me here, this 8-hour candle is suggesting that I'm most likely going to have to treat this 8-hour fair value gap as a breakaway gap, meaning I don't want to see prices trade up into it, but it's not, I want to say it's not as bearish, right, as like a closure like this one. Like if you guys take a look at this 10-hour closure here, easiest assumption is that we're going to take out the 10-hour low. It's pretty bearish, right? Coming into this 8 hours though, the next 8 hours and the next 4 hours, it's not as conclusive, it's not as clear, but objectively I would have to treat this inefficiency here on the 8-hour time frame as a breakaway gap. So that means we could either consolidate coming to the next 8 hours, or we're going to take out the 8-hour low. Those are the two, I guess, scenarios that could play out. It's just I wouldn't force the idea of lower prices unless the lower time frames tells me so, right? If we respect this inefficiency on the 15-minute time frame and create that bearish candle from it, then I'll consider being a part of something, right? But for now, I'm not going to really force anything here. So Let's go into my trading journal. Oh, one thing I do want to mention here too is that we are actually going to close here on the monthly candle in 7 hours. I'm pretty sure I've already gone over that, but to emphasize, this monthly candle is closing extremely bearish, right? The easiest assumption for us to make here is that we're most likely going to take out the monthly low. Just to throw that out there. I want to see us continue lower going into April's trading. Alright, so going into the pros and cons for this week. Alright. So for the week of March 17th and March 21st, some of the things that I did good and some of the things I can work on, right, is taking consistent trades every single day. How am I going to do that? I should be able to identify a higher time frame objective. I need to be able to identify a model and a entry pattern. All three of those components should be met whenever I am entering a trade, right? Yeah, I should be able to identify all three of those components. Second, utilize SMT with my trades. So if you guys paid attention to my live streams last week, where I went over the one trade that I took last week, one of the main confluences for my I guess bias was that because there was a lack of SMT between NQ and ES, that suggested the idea that we could possibly continue lower. Vice versa. If there is SMT, if there's a presence of SMT, that means we could possibly reverse, and that I should move my stops to break even or just consider not taking the trade at all, right? So just associate the lack of SMT with a possible continuation in that specific direction, right? And if there is a presence of SMT, if there is SMT, then you want to consider not taking the trade at all or moving stops to break even if you are present in a trade. Third, using standard deviations. So, if you've been an ICT studier or study, you would know about standard deviations and utilizing standard deviations as projections, right? Projections for further, I guess, target profits. And so I utilized standard deviation last week, and I was able to implement it with my trade, the one trade that I took last week. Fourth, understanding the importance of time frame alignment. So time frame alignment is essentially going from one time frame to another, not in the sense of going from the weekly time frame straight to the 1 minute time frame, but time frame alignment is going from the weekly time frame onto the daily, onto the 4 hour. So notice how there's a contrast, or a contrast is the same. Notice how there's key differences between going from the weekly, daily, 4 hour, from going from the weekly straight onto the 1 minute, right? One is like reading from page 1 to page 2 to page 3, etc. The other is like reading from page 1, skipping 10 pages, and then you're reading, page 1 to all the way to page 10 to page 27, etc. There's not a correlation, right? And you're going to miss out on so much information if you're not utilizing the time frames correctly. Second, what can you work on? What can I work on coming into this week? Doing my due diligence, actually putting in the time and effort to research and study the things that I have question about, and always being curious. How can I be curious? Well, ask the question why. if you don't, if you're given a concept and you're just going to strictly follow it because your teacher tells you so and you don't understand the reason why, then you fully haven't grasped the concept. Just something that I do want to mention is that like yesterday I was studying the the understanding of a stronger dollar, weaker dollar, right? I haven't grasped the concept yet, but I asked ChatGPT, why is having a stronger dollar, why could it might not be beneficial for the United States government's economy? What are the pros and cons of having a stronger dollar? Why is there even a stronger, what leads to a stronger dollar? There's a brief answer to that question is the dollar has always been a staple, and it's the most used currency for national trades, right? It's banks around the world are always going to have the dollar as their reserve currency because it's a currency that could be depended on. It's dependable. It's essentially like it cannot fail. But I mean that's just a theory. That's not like concrete. It's not going to fall, right? It's just the economy. The United States economy is just that strong and that stable, where it could use its currency as a weapon, and which is why strong dollar it means that there's stability in the markets, that we're pretty much dependable. But a stronger dollar could also lead to it could lead to exports, not as much exports. So there's always going to be that deficit between imports and exports because of a strong dollar. It's going to cost consumers outside of the United States more money to buy United States good, to vice versa. Imports are going to be cheaper because the dollar, in comparison to another currency, the dollar is always going to hold more value. So the consumers that are importing goods into the United States won't have to pay as much when the dollar is strong. But that's just always ask why. Second, concentrate. Don't be distracted by external factors. Understand the importance of momentum. For me, coming into last week, it was pretty lackluster. I mean, I had everything that I had set myself to do, I would do it. It's just there were a lot of times where I spent 5 minutes on Twitter or something, and then 30 minutes of work, bam, another 5-10 minutes of just that idea of instant gratification, just reward. It's not good. So coming into this week, I'm really going to put more effort into really staying focused and utilizing that concept of momentum. So some improvements here for this week. To take consistent trades, right? Consistency, it's key to trading and to whatever that is that you're doing, right? You have to show up every single day for you to actually have progress. I'm sure you've heard this multiple times where they're always going to reference a gym analogy, right? And it's something that it's very true. You can't show up to the gym in one day a week and expect for you to be gigantic in the next 2 weeks. That's just something that cannot happen. You have to build your muscles over time, over and over and over, consistently until you can actually see results. And a way for me to actually show that I'm consistent in my trades is that I have to identify a higher time frame objective. I should be able to identify my model and entry pattern
all three of those components should be present when taking a trade. Second improvement, just utilizing SMT, right? SMT. So here on ES, you can see here the SMT, the lack of SMT between ES and NQ. So ES, we have taken out this swing low. What do we do here on NQ as well? We took out that swing low. So because that lack of SMT divergence, because both indices have no SMT, this suggests the idea of the idea that we could continue to go towards that specific direction, right? We're bearish right now in the markets, and because there's SMT, this suggests the idea that we probably and should continue towards that specific direction because the lack of SMT. And third, follow the rules of my live funded account, right? I have to trade at least once a week, something that I think is kind of, I don't want to say dumb, but it is like these rules that they have for you, like, if you're a trader, right, you would understand, like, trading at least once a week might not happen. If your strategy is, like, for me, my strategy sometimes doesn't even show up once a week. But for me to negate this idea of trading once a week, I'm just going to have to take a paper cut loss or a paper cut win. It doesn't matter. As long as I get that one win, right? Or that one trade. So, it goes past the idea of not taking a trade if the strategy isn't there, but I have to be a little bit loose, and I'm not even gonna consider this a trade that I take. I'm just gonna take it just so that I can bypass this trade once a week rule. This trading activity rule. I think it's stupid. And second rule that they have for us is that consistency. I think this is reasonable. Profit, like, so the rule is that a maximum trade of yours should be 40% of your total profits, right? So let's say that your account's $1,000 that you have in your live funded account. The maximum dollars per trade that you should have in one trade should only be $400, and they're trying to get you to show consistency. I mean, this makes sense. This is something that I could reason with, but this trading activity where you have to trade at least once a week is not something that is beneficial for the trader, or well, I mean, this is beneficial for them because it's going to it's just higher chances of you just blowing your account. But yeah. And last thing here, just being patient, right? Nothing for you to really force. There's nothing for you to force if the strategy isn't present. Just be patient, and yeah. And the last thing that I do want to go over here with you guys before I get off is that this week I really am anticipating a large expansion. It's just something that I feel like I've seen this happen before, where whenever we trade into a inefficiency, right? And this is a weekly inefficiency. Whenever we trade into a weekly inefficiency, we tend to, like any inefficiency actually, you tend to get like a really large move in that direction. So this week, I really do want to see us expand lower. So if we take the standard deviation of this weekly candle here, so last week we moved about 1,180 points. If we move 1,180 points this week, right, where are we gonna be at? 1,180. We'll be around like right here. we should, if I'm going to like project the same amount of range from last week to this week, we should ideally take out this swing low. Just something that I'm going to put out there. That's going to be the draw of liquidity for this week. That's forwarded, right? The weekly objective was, I guess, was previous week's low, but just having this as a projection, it's just going to give me more clarity. But yeah, so I do want to see us take out this weekly low here. Swing low, so I'll do that as a sell side level. Sell side liquidity. That's something that I do want to see coming into this week. All right. And with that, I think that's going to wrap it up for today's live stream. Oh, wait. Yeah, that's going to wrap it up for this week. Oh, yeah, I'll call it a week or a live stream here for today. Thank you guys so much for tuning in. And until next time.